Good morning and welcome to Money and Business. This is a 6-part series on talking about how your money and your business and who are the people that you're going to be talking to about your money and your business. So we're going to start with talking to a banker. How do you have that conversation with a banker, and what is it that a banker is looking for? My name is Brenda Bryant. I am a small business educator here at UNR Extension. I teach a series of classes on how to help small businesses maneuver through this thing that they've gotten themselves into. Once they decided to start a business, what do they do next? So we want to touch on as many things as we can that help you to have this journey. And it's an exciting journey, but we want you to have this journey with as much support as we can give. So this is the beginning of the series, and this is talking to a banker. So what we're going to talk about today is, if you need to borrow, don't make an assumption that you need someone else's money right off the bat. Let's make sure that you actually do. What do you need to borrow? How much money do you need to ask for? And how are you going to use that? What are you using that money for? So welcome to the class. So we're going to start with understanding the basics of finance. So when you ask your banker for money, what does your banker ask of you? And if you've ever had this conversation, or if you've ever had this appointment with the banker, they tell you up front, bring this kind of document and that kind of document. And then they ask you questions about what's happening in your business. And they're very interested not only in what's happening in your business, but they're very interested in knowing that you understand what's happening in your business. So let's talk about the thing that really makes the business run, and that's your cash flow. So what is cash flow and why do you need it? Well, cash flow is the money that's coming in and the money that's going out. You always want to make sure that there is enough money coming in that it will support the money that needs to go out. So what do you use cash flow for? Well, you pay your vendors, you pay your employees, you pay your rent, you pay for your supplies. Okay, there's a lot of things in the business that you need to pay for, and you need to have cash in order to do that. Cash flow is the money that you use to keep the business running in a smooth and timely manner. I know that there is an invoice that is going to be paid on a particular date. It's going to bring me a certain amount of money, and I know that I have bills that are due on particular dates, and that money will be able to cover those bills. So how do you manage your cash flow? How do you make sure that there is enough coming in so that it covers enough going out? And what do you do if it isn't? So if you don't have enough money coming in to cover what's going out, you need to look at your costs. And you need to see, what are you doing in the business that you can cut some of those costs so that you have the money to pay the bills that you need to pay. If you don't have that money, you need to negotiate. You need to call your vendors, you call your suppliers, you need to let them know that, yes, I do know that I owe you X amount of dollars, but I also haven't gotten in the income that I had expected. So instead of paying you X amount of dollars, I would like to pay you Y amount of dollars at this time, and then Y amount of dollars at the next time. You want to make sure that you're doing your job and you're actually collecting these invoices. You send out invoices to people, which basically says, you owe me money, please pay me. But you need to also let these people know that, yes, you do need to pay me. Let me make sure that you haven't forgotten me, because it does happen. And it doesn't mean that they're being vicious or mean, or if they're trying to scam you. It just means that sometimes people forget. So we want to make sure that they remember, because that's money that's needed in our business so that we can continue to offer the great service or product that our customers want from us. We also need to learn how to forecast how cash will be used and when. We need to have a really good working idea of how this money that's coming in is going to be going out, and why it's going out, and what it's going to cover. Managing your cash flow will relieve the stress of never having enough money to run your business well. That stress will cause you to have great problems in your business. So before you borrow money, the banker has some questions. So what kind of business do you have? How long have you been in business? Is your business profitable? How strong or weak is your business credit? Why do you need to borrow this money? Are you trying to get new equipment? Are you expanding your business? Did you get a new contract, so therefore you need to get more resources to cover that contract? In other words, you need to prove to the banker that investing in you is a great idea. We don't want you to be a good idea. We want you to be a great idea, so that the bank looks at this and says, yes, this is definitely a business that we want to support, and we will help them by giving them the money that I shouldn't use the word give, I apologize, loaning them the money that they need to move forward. Because it is a loan, and yes, you do have to pay it back. That's one of the reasons that the bank asks so many questions. They want to make sure that they're comfortable with what your business does and with the management of your business, that the management of your business actually knows how to manage the business, because the bank only has one thing to sell, and that's money. And they would like to have their money back. So they want you to be able to, yes, let us help you at this time, give you X amount of dollars to support your business. And then as your business is supported and grows, you will be paying us back those dollars so that we can reinvest that money into another business. Are you a great investment for the bank? Do you have enough money to run your business? Can you function in your business without this money? How well do you function? How easy is it for your customers to pay? Do you make it easy do you take credit cards? Do you take checks? Do you take cash? How do you get money from your customers? And do you make it as easy as possible for them to pay you? Do your customers pay you on time? If they're not paying you on time, do you have a system set up where you give them a nudge right before that particular invoice is due so that they will pay you on time? And the converse of that is, do you pay your vendors on time? That's part of what's going to secure and support your business credit rating. Do you pay your bills on time? Do you have a money is running short plan? If something happens and that money isn't coming in the way that you thought it should, do you have a plan? Do you have a plan B, as I call it, to say, let me figure out what needs to happen if there's a shortfall in my money coming in, because I still have those same bills as money going out. And we talked a little bit about, calling your vendors and suppliers and negotiating your payments to them, getting on the phone and calling your customers and nudging them so that they pay you. They may have forgotten, okay, that they pay you that invoice that's owed, etc. So are you a great investment for the bank? Continuing with, are you the right person to run this business? Do you have enough knowledge and expertise and support to run this business so that the business will continue to thrive? What are your vision and mission for the business, and are they written down? I know people get kind of upset when you say you need to write it down, but as long as it's in your head, it's vague. And it's really hard for you to get that vague idea out of your head and into someone else's. So write it down, make it very easy for people to understand. And then everybody knows what your mission is. Why are you in business? They know what your vision is. How do I see my business moving forward? Who's on your management team? Do you have a financial person? Do you have a management person? Do you have an organization person? Do you have a shipping person? Who is on your team? And how strong are they in those positions in which you put them? And who's in your support team? We all need to have someone who supports us as we go through this journey. Sometimes we don't need anybody to give us advice. Sometimes all we need is someone else's ear just to listen to us as we talk this through for ourselves. So remember that support team is extremely important. So let's talk a little bit about credit, because credit is extremely important for you and that conversation that you're having with your banker. A lot of what happens, especially for new businesses, is that you don't have a business yet, so you don't have any business credit. So what the banker is going to be looking at is what's your personal credit. Back to those same things that we talked about before. Do you pay your bills on time? Do you have enough money coming in so that you can have that cash flow that you need? There are two basic ways of managing and assessing your score, and one is called FICO, which is the Fair Isaac Company, and one is called Vantage. They do the same thing, they just do it a little bit differently. They have Vantage has changed its scoring process so that it has the same scoring numbers that FICO does. So the FICOs, they both start at 300 and the highest is 850. But you'll notice that they use different wording and they use a little bit difference in their numbers when they're assessing what is happening with your credit. Now, why is this important? Because if I want to loan you money, I want to know that you're in a position that you will pay me back. I would like to have my money back. And in the process of doing that, I'm looking at how well do you pay people back? How well do you pay on time? What kinds of things do you use your money for? How long have you had credit? Are you a new credit person or have you had credit for several years? So as someone who wants to loan you money, I'm looking at all aspects of not only your business, but also your credit. As a new business person, I'm definitely looking at your personal credit because it's going to tell me how you're going to run your business. If you can run your personal credit well, I feel more comfortable that you can run your business credit well. So what is a personal business score? We talked a little bit about that. So it's based on your social security number. It's based on your payment history. It's based on your level of debt. How much do you have out there that you've borrowed from somebody? And credit card is a big example of that because a credit card just basically says, I'm borrowing money to pay for this thing right now that I plan to pay back to the bank. What kinds of credit do you have? Do you have a mortgage? Do you have a home loan credit? Do you have a personal line of credit? So looking at all different kinds of credit that you have, and of course that new versus older credit accounts. How long have you had credit, or are you just very, very new at this? As the person who wants to loan you the money that you need, these are things that I need to have you answer so that I, the banker, feel comfortable to say yes to you. Now, business credit score is a little bit different. So I'm just looking at three of them, looking at Experian, which is called IntelliScore, looking at the Dun & Bradstreet, and they use Paydex score, and looking at Equifax, and they use credit risk score. So you'll see that their scoring is totally different than what they use from personal scoring. So Experian and Dun & Bradstreet, they base it on 0 to 100. But Equifax has a completely different scoring system, okay? And theirs is not based on how well you use your money. Theirs is based on the risk of giving you money. Where are you in this line of risk? Are you a risky person? Or are you a person that is risk adverse, that I, the banker, feel comfortable in giving you the ability to get a loan from me so that you can continue to function in your business? So when you're looking at business score, it does not go on your social security number. It goes by your employer identification number. And as a business owner, you need to have an EIN. Again, some of the other things look very similar. They look at your payment history, look at your debt usage, look at your industry risk. What kind of industry are you in? And how risky is that industry, and how risky are you as a business in that industry? They also look at your company size. Are you big enough that they feel comfortable in giving you money, or are you small enough that they feel comfortable in giving you money? That's going to be based on what kind of loans they have and where you fit into that parameter. And also, again, back to that credit age, how long have you had your business credit? So this is the part that kind of bothers a lot of people. Show me your paperwork before I show you the money. I can't make a decision as a banker or as a lender until I see some documentation to back up the conversation that we've had. So I need to see your tax returns. Well, what if you're a new business? You don't have any business tax returns. Then you need to bring in your personal returns, and the bank will tell you what they're looking for and what you need to bring. Listen very carefully to them, okay? If you've been in business and you have financial statements, they're going to ask you to bring in those financial statements, and they're going to tell you how many financial statements they need, what the coverage of those financial statements include. Is it going to be a year's worth of financial statements? Is it going to be 2 years worth? They're going to tell you exactly what they're looking for. And they look for this thing called a business ratio. So let's just look at that for a moment. A business ratio is looking at, in essence, how much do you have in assets and how much do you have in liabilities? Normal ratio is usually 2 to 1. If I have $100,000 in assets and I have $50,000 in liability, I have twice as much in assets as I have in liabilities, which says to the banker, there's room in there for you to pay me. You're not so overly loaded with liabilities that you can't pay me. And that's what I'm looking for. Okay. Always looking for sales volume and growth. I want to see what you're doing. I want to see how it's selling. I want to see the progression of the selling, of the sales. The banker wants you to prove that you are a great investment. Remember, we're not looking for good, we're looking for great. We want to come in there and put our best foot forward. So, what kind of money can you get? Well, you can get a business credit card. So, business credit card is a short-term loan. All credit cards are short-term loans. It helps you with cash flow management. You can use it for service or support or self-imposed spending limits. You decide how much you're going to use of that. Okay. Now, when you get a business credit card, they may tell you this credit card has X amount of dollars on it. What you decide is how you're going to use those dollars and pay them back. The good thing about the business credit card is that as you pay that back, that money can now be used again. You may have a business credit card that offers you rewards. Look at that carefully. See if there's something in there that is going to help you with your business, but be very careful of the interest. Remember that your interest is attached to your balance. So if you're using a credit card, and you spend money on that credit card and you do not pay that amount off at the end of that credit card period, which is usually the end of the month, then that interest is going to be attached to what you have left over, what that balance is. So be very careful. We know that we're in some areas of our economy right now where things are going up and going up fast. We have tariffs that are kicking in. We have prices that are going up, and the interest rates are that all of that is going to be hitting. So be very careful with your credit card. Have a plan, have a strategy of how you are going to use that credit card. That bank may also offer you a business line of credit, which is kind of the same thing, just a larger amount of money. A line of credit you can use for bigger purchases that you want to make. Like if you want to buy some inventory or buy some equipment or whatever, you may use your line of credit for that. Also, businesses use their line of credit is kind of like their foundation, their just in case money. The credit, the amount doesn't kick in until you use it. So if you got a business line of credit for $10,000, that will sit there at $10,000 until you take some money out of that line of credit to pay for something. The minute that you took $1,000 out of the line of credit to pay for something, when you pay that $1,000 back, you now have $10,000 again. Okay. And so you want to take advantage of any discounts that the line of credit will offer. And again, you want to use that as your just in case money. You want to shore up your operating capital. You want to run your business on the income that you're getting from the products or services that you are offering your market. That's how you really want to run your businesses. But just in case, you've got a line of credit if there's something that pops up and you need that extra money right now. You've got it in your back pocket. So what kind of money can you get? Continuing on, you can get a business term loan. Okay, so that's like, I want to go to the bank and I need to get $50,000. And so the bank tells me how long that term is. Is that a 5-year term? Is that a 10-year term? Is that a 25-year term? And I'm using that money because I've got a big expenditure that I need to take care of. A CDFI is a community development financial institution. It's funded through the U.S. Treasury, and its purpose is try to reach underserved communities. So let's look at those businesses that don't normally reach the needs of a bank or a lending institution. They don't have the time in a business, or they don't have the other funds in the business, or they don't have the income coming in the business as other places, as what banks are looking for. So with the CDI, they have a little bit more flexibility in reaching some of the businesses that the traditional lenders don't reach. There's always venture capital, and please, before you say yes to a venture capitalist, do your homework, okay? Because a venture capitalist is investing in your business because they see potential in your business, but they also take a piece of your business, and many of them want to have a stake in the management of your business. So be very careful with venture capital, and that's usually for makes the larger investments. So, and then they're not a lot, and they're getting less and less, but there are business grants. And so that is definitely something you want to do your research with. Talk to your financial professional, whether you have an accountant or a bookkeeper or whatever. Talk to them about, do they know if there are any grants out there? Talk to your support system, your business advisor. If you're a client with the Small Business Development Center, or if you're working with a SCORE mentor, talk with them about this as you are out here looking for how you can bring money into your business. Have those conversations, because these people are knowledgeable and they can lead you in the right direction. So we talked about how to talk to a lender or how to talk to a banker. And hopefully this has been information that helps you as you have that conversation with your banker, because you may run into a time where you're going to have to ask somebody to help you fund your business. And how do you do that? Thank you for your time and attention. It's greatly appreciated.